talk about buying a share when it's trading above its book value, and I'll concentrate on Stanbic. If you look at Stanbic today, it's been trading between 280, 285. Then there is a buyer who had given 274. If you look at their 52 weeks high, which is for 1 year, it's like it's at its highest price at 285. And this is a very good question, because it's one of the most important thing that any investor need to understand before they buy any share. Is it overvalued or undervalued? The other day I taught you how to do the valuation of a share. It's the net asset over the shares outstanding. And now you get the net asset is total assets minus total liabilities. That is, you get the net assets, and then you divide by the shares outstanding. If we just go through the reports that the Stanbic released the other day, their annual audited reports for year 2025, is their summary of the balance sheet. If you look at the total assets, it was 541.3, their total liability 461. So to get the net asset is 541 minus 461, and you get net asset of 80.01, that figure down there. So to get the book value of this share, to determine whether it's overvalued or undervalued, it's you get the 80.1 billion divided by the total shares outstanding. The total shares outstanding for Stanbic is 395.32. So if you divide 80.1 billion divided by 395.32 million shares, you'll get a price of around 202, 203 per share. Comparing that with what Stanbic is trading in at the moment, which is 285, that counter is already overvalued. But an overvalued stock just means that the market price is higher than the company net assets. It doesn't always mean that it's a bad investment. And investors will still buy Stanbic. Why? Because of its strong fundamentals. If you go down here, just even look at its profit and loss. Though it remained the same, profit after tax 13.7, 13.7, is still there, is still strong. There is no decline. If you go down here to their key performance ratio, just look at their net interest per margin. This is how much the bank earns from interest from loans relative to the interest it's paying on deposits. Though it's gone down slightly, and I can attribute this to the way the central bank has been cutting rates, so it's gone down slightly, but it's still not so much compared to 6% with 5.6% when it was the highest. Look at its cost to income ratio, how the bank is managing its cost relative to income. Look, it's managing its costs by 46.2%. So it's gone up. They are becoming more efficient in managing their cost. Look even at their credit loss ratio. It measures the proportion of bank loans lost due to default, because people default. It's gone down significantly to 0.6%. What does this one tell you? The fundamentals are still strong. Look at even at the earning per share. It's gone up. Though it has remained the same with year 2024 as the same as 2025. The earning per share, that is, each share is earning how much in terms of profit, is still there at 34.7. So fundamentals have not changed. Look at the return on equity, which is these are a ratio that you measure how much they are using the shareholders' money to generate profit. Though it's gone down slightly, but not so badly, from 19.3 to 18%. They are still generating, they are using the shareholders' funds to generate profits at a rate of 18.0%. Look at the dividend per share. It's been growing 12.6, 15. This year it's 22.35. So it tells you it's a company that is growing fundamentally. The dividends are reliable because they have been growing. And then investors are willing to pay more in terms of it's overvalued at the moment because of the trust that they have in this business. So once you buy, you gain more of stability, predictable return, and dividend income. But if you fear buying at this price, you can wait for the price to dip because there will always be price correction. There is no share that continue going up. Then when it comes down to that price, maybe of around 2 or 3 when it's the same as the book value, you can buy. The other thing, consider buying in small portion instead of going all in at once. Buy in small portion. When it goes down again, buy. And this is what we call dollar cost averaging, or averaging. You buy kidogo 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 until that price, the entry price, comes down, and this reduces the risk of overpaying. The other thing, have a long-term view. You are not buying so that you make quick gains. You hold it like for 5 years, 10 years, and then you enjoy the dividends and any capital gains that comes with Stanbic or any other share that is overvalued in Nairobi Security Exchange, and it comes from those fundamentally strong companies. And sorry for bothering you with so many accounting jargons. I've done this because there's one fear who felt that I'm a bit basic. But what I'll tell you, this may be too complicated for you. You just need to concentrate on at most 5 figures in those financial statements. Revenue. Check whether the revenue of a company is growing. The second thing that you need to concentrate on is profits, especially the profits before tax, because that comes from the operations. Are they growing or are they declining? The third thing that you need to concentrate on is the cash flow. Cash flow is very important because a company that is generating cash flow, it doesn't need to borrow to finance its operation. It pays dividend well. So look at the cash flow. Is the cash flow growing, or it's stagnating, or they have negative cash flow? There are some companies which have negative cash flow. Then the fourth thing that you need to look at is the debt, because a company can have good books but it's being overwhelmed by its debt. And are they borrowing to finance their operations, or are they borrowing for expansion? So check for those 4 figures. And the final figure, if you are a dividend investor, check whether the dividend is growing, whether they are consistent dividend payer. Avoid all these accounting jargons because they are going to complicate your life. Sijui return on equity, sijui credit loss ratio, all these, they are going to complicate. So concentrate on those 5 figures and you're good to go. Thank you.